In this video, I'm going to share 5 emotional traps and how you can counter them while investing in silver and gold. Investing and managing our emotions should go hand in hand, as our emotions can be quite powerful. Never has a market triggered so many emotions as the silver market. While our belief in the metal is unwavering, sometimes we need to tell our emotions that. Like a young kid excited to ride their first roller coaster, many of us silver investors entered 2022 with that same type of nervous excitement and anticipation that this year, this ride was going to be different. After seeing silver hit 29 early in 2021, many of us thought silver was primed and ready to go. And when there was a letdown, let's not talk about 2021, because 2022 was going to be a year for us, and we could all see the market conditions that were setting us up for a great year. Yet, here we go again, below 22. Unfortunately, somewhere along the way, what was supposed to be an incredible ride had us fighting to keep our lunch down for the sake of everyone else on the roller coaster. Even though this may feel like the aftermath of a Friday night gone wrong, I want to submit to you that silver and gold have done incredibly well, all things considered. Now, I know that's not what you had hoped for. It's not the $100 silver many have tried to sell us on. And no, it's not quite gone to the moon, but only being down 6% compared to other investments isn't terrible, all things considered. It's also offering us an opportunity for what might be called a gut check, meaning an opportunity to really see how much we believe in this metal. Gold gets all the love for very good reasons. However, we know that silver, gold's little brother, is going to outperform him one day. As a result, we aren't going to focus on whether silver is a good investment long term. No, not in this video. The real questions are, do you have the intellectual knowledge to know when to add to your position and the emotional fortitude to follow through? If you're knowledgeable and skilled, it's not timing the market. It's understanding the market and maximizing your buying opportunities for incredible returns. Stick with me as I'm going to provide you with the knowledge and strategies to use the emotions of others to help you identify the right time to make your moves and improve your gains. So let's talk about it. Let's not kid ourselves. Investing is emotional. The difference is sophisticated investors learn to manage those emotions and know how to think in the presence of their emotions. The average investors do the opposite. As Benjamin Graham liked to say, the worst enemy of the investor is most likely himself or herself. Fear and greed are the primary drivers to some of the biggest mistakes investors make. The pain of loss hurts way more than the pleasure of gain. This fear of loss often results in impulsive decisions that lead to really less than favorable outcomes. What we need to discuss is an area of study called behavioral finance, which is really the study of the effects of psychology on investments and financial markets. It focuses on explaining why investors often appear to lack self-control and act against their own best interests and make decisions based off of personal biases instead of facts. I know, this isn't a sexy topic. And while it would be nice to sit back and show you all the pretty coins that I paid too much for, that's not why I created Stackers, and that's not why you're here. We are here because we want to excel in investing. We want to get the most metal we can, and we want to have the largest profits we can. And this is how we do it. We have to put in the work. So let's get right into it. Trap number 1, the behavioral gap. Researchers have found that the root cause of many of our poor investment decisions are really about our emotions, and that we don't ever really confront or learn how to manage them. This is why I love behavioral finance so much. So much research about this, and what they found is that anywhere from 2 to 3% every year is lost in investment returns because the need for emotional comfort by investors. Let me say that again. The need for emotional comfort costs the average investor around 2 to 3%. So here's the counter for that. If you've been around Stackers, you've seen my teeter-totter analogy of emotions and thinking. And in a nutshell, the higher your emotions go, the lower your level of cognition or logical thinking. The easiest way to combat these emotions is with knowledge. I've seen countless people jump into silver, in particular over the last year or two, because they heard silver was going to the moon and all this other type of hype. I don't use that language on this channel. We talk about our thesis or our belief and where the market will go based off of data and market indicators. This allows me and those that follow this to be less emotional when things take a downturn. Trap number 2, listening to the hypers and not having a good team of advisors. So listening to the hypers and those that only want to get your clicks or views is dangerous for your investing. I want you to go back to my ignore the predictions, focus on the conditions video, which I'll link at the end because I talk a lot about this and who and what information you need to let in your head needs to be closely regulated. So how do we counter this? Before you take advice from someone, ask yourself, what education, training, or experience do they have that makes them worthy of me listening to it? What are they basing their information or decisions on? Heck, this includes me. I don't know it all, but I also have a team of advisors that I study and learn from and do my research as well. And that's what I bring back to you. And don't be confused here. Your advisors don't have to be people that you can actually pick up and call. They can be people like Rick Rule is for me. Many of you know that I'm a disciple of his. Find your trusted advisors that you listen to and let their information into your head. Trap number 3, the fear of losing money. This one is simple. The moment you put money into anything, silver or gold in this case, you don't actually have a profit or a loss until you sell. As a real estate investor, I learned very early on that the price of a house didn't matter until I either sold or refinanced. Everything else was just noise. So think about it. If silver was $100 a day, would you be any wealthier? Sure, on paper, but that doesn't put gas in your car. It only matters when you have to sell in this particular situation or when you choose to sell. Trap number 4, buying because, quote, they said whatever the heck they said. And so we counter this very easily again by knowing why you are buying. And if you bought or are buying because someone else told you, you're already in trouble. You've heard me say this before. You have more time than you do money. So invest your time to learn before you actually jump in and start investing your money. If you haven't done your homework and if you don't understand the investment, you don't have a strong thesis or a case for why this is a good investment and why it deserves you to put your money towards it, nothing should move you from your position. It's a simple concept and it's about having a strong enough why, an understanding of the investment. The conditions will make your why so much stronger, strong enough that the how will take care of itself. Okay, folks, I need some help. Please give this video a thumbs up if you have found this helpful or learned something as a token of appreciation for all the hard work that it's taken to make this video and so that I can help get it out to more people. And if you haven't subscribed by now, what are you doing, folks? You see, this is what we do on this channel. So hit that subscribe button because Stackers is here to help you be a smarter and better investor, and you don't want to miss these videos. Trap number 5, not knowing the downside. It's amazing how many times people jump into an investment or jump into something and they don't even think about the downside and how they can manage the downside. You've heard me say before, we don't avoid risk as investors, we learn to manage the risk. And so this counter is all about 3 kinds of risk. Riskability, can you afford to risk this money that you're putting into play? 2, your risk tolerance. Can you actually stomach the process that this goes through, the gyrations, the ups and downs? And risk awareness. Do you understand what you're really signing up for? Before you begin investing, you make sure you know this downside or the risk associated with the investment. If you can't handle the potential short-term downside or volatility, you have to ask yourself, should I really be investing in this? Now, I know I said there was 5, but I'm going to give you one more bonus, and this is the ultimate counter. If you've been around Stackers for a while, you know that I love the anatomy of a bubble model because it's a simple tool that doesn't require special training or understanding in order for you to make sense of it. Today, I'm going to share with you the investment process, a roller coaster of emotion, because this allows you to associate specific emotions with specific segments of a price cycle. So I encourage you to take a screenshot or Google the title and spend some time really learning about this. The key that I want to remind you though is you have to remember that you are not the investor they are referencing. You're no longer that average investor because you've been rolling with Dr. Stacker and Stacker University for 40 plus videos, and now you're smarter than the average bear. So as a result, you may not experience these same emotions in the same way when you look at this chart. Don't use you as your own litmus test. Think about the other people out there. Think about what you hear from people. Think about what you read on Reddit or you see on discussion boards. Reference this chart and I promise you it will be very clear where you are on the roller coaster ride. Of course, if that's not enough, and if enough of you request it, I'll do a specific video on the chart and walk you through it. Just let me know in the comments. In fact, I want you to light up the comment section by sharing one of the traps that you have struggled with or seen others struggle with, or share any advice or words of wisdom about emotions and investing. With that, please remember that riding this roller coaster, this emotional roller coaster, can easily lead to self-defeating behaviors. And the daily gyrations of the market will make you feel like the kid who got on a ride after drinking an Oreo cookie shake. Resist the emotional reaction and choose to invest rationally and act logically by utilizing the knowledge you have. Don't forget to click on the predictions video or the anatomy of bubble video if you want to learn more about what was covered today. This is the how and the why behind we always stack smarter and never stop learning.